Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Peggy Martin. Peggy is a fee-only financial planner with the Family Wealth Consulting Group. The Family Wealth Consulting Group is a family business.
Yes, indeed.
So Peggy works with her husband, Craig Martin, and also their daughter, Hillary, and another daughter, Alyssa, has recently joined the business. So congratulations on that.
Thank you.
Anyway, Peggy has more than 30 years of experience in the financial services industry. She assists clients with family wealth planning, including legacy, financial, estate, investment, and insurance planning. And her credentials include a Master's of Science in Financial Services, hard won.
Yes, yes indeed.
Chartered financial consultant, chartered life underwriter, fellow Life Management Institute, and chartered advisor for senior living. And sometimes Peggy actually gets to do some work. So actually I can tell you Peggy works very hard. Anyway, Peggy, thanks a lot for joining me today.
It's a pleasure to be here, Mike. Thanks for asking me to participate.
Yeah. So over the last several years, I've had more and more clients. Peggy, they're asking for you to sit back just a little bit. I've had clients asking about socially responsible and sustainable investing. And Peggy is an individual who's very interested in the community and interested in the interaction of investing and that activity, and also very charitably involved and so forth.
Correct.
So I thought Peggy was a good person to be talking to about this subject. So that's going to be our topic today, is socially responsible and sustainable investing. Peggy, why is there, do you think, a current interest in socially responsible investing and sustainable investing?
Well, I think you hit it somewhat by saying people do want to be community involved, and to be community involved out for the next 50 years is going to take some kind of social responsibility and awareness of the things that need to be in place so that services can still be around 50 years from now. I'm very active in a nonprofit group where our message is we want our nonprofit community to be here 50 years from now. And what's better than putting up pictures of your young grandchildren to say, gee, 50 years out, if they need these services, I would like for them to be able to have that. Also, investors want to meet their own needs without compromising what might be available for their children and grandchildren into the future. I'm hearing that a lot from my client base, in particular a lot from the women clients that I work with, that's important to them, being able to maintain their wealth and have their wealth for the next generation, but also have it in such a way that it's helped community and it has not harmed community. A saying that's used is that socially responsible investing and sustainable investing both promote the desire to do well by doing good. And with sustainable investing is more environmental, where social responsibility investing is a lot around what are the employment practices of an organization, which could also be environmental, but employment practice meaning, is there discrimination taking place? Is it across the board, equal pay and equal opportunity for everyone being employed? Those are some of the characteristics of socially responsible companies.
I think what it boils down to is people are interested or want to see the companies that they are supporting by investing in them, that they are contributing in a positive way to our planet.
Correct.
To the communities that they are working in, and as well as to the country as a whole, and in also providing valuable services themselves.
Correct.
And products. So anyway, okay, well, how significant has this area become as a growth area?
Well, it is phenomenal, the significance of it. If you could wind the clock back to 1995, according to the Social Investment Forum, In 95, there were $639 billion in assets in socially responsible, or what was called socially responsible at the time. And as of the end of 2010, that is up to $3 trillion.
That's a huge.
That is a huge, huge growth pattern, and it seems to be a pattern that is established and moving forward.
Okay. Well, how many choices are there for like mutual funds in this area?
There are multiple mutual funds that you can work with. We have chosen, though, a group of institutional mutual funds that allow us to use our structured investment methodology, which is to combine asset classes so that we can have global diversification and that we're in thousands of securities. We create the portfolio. We're not the expert at SRI. We hire the expert at socially responsible investing. They have the screens in place. We read what kind of screens that they do have. And screens can be positive or negative. They're not always negative. We're hoping that the people that we have hired to do this are looking at what positive is this organization doing for community and society, as well as maybe some areas that are somewhat negative.
Okay, yeah. So in other words, what are the things that they are doing, and then for the companies maybe that we want to screen out as far as maybe they're involved in activities that we don't really necessarily approve of. And I mean, a couple that just come to mind is that people may not want to support companies that sell tobacco products.
That could very well be. That is one I hear a lot, not only from just a societal issue, it's from the individual issue. Frequently I hear that from people who have lost somebody that's died from cancer.
Yes, we have.
Or has died maybe from emphysema.
Yes.
And really has a strong feeling towards not promoting that. Or if you get the true person who was the chain smoker or the smoker, and then they decide that they're not going to do that anymore, that that's not the lifestyle they want, they are a very strong advocate of not investing in the tobacco industry.
Yeah. Okay. So let's see here. What are some individual industries that people have been interested in?
Well, the popular press is the solar energy, and then also hybrid cars. But the more I talk with people about social investing, and I get this mostly from the community groups that I'm involved with, it gets back to what are the standards of the company. That's how they're perceiving socially responsible investing. The standards of the company, are they a good corporate citizen? And again, I'm hearing more and more frequently, especially since I'm involved in more women's groups,
yes,
is about the equal pay and equal opportunity for women. Are women being treated on the same platform that men are? Or are other minorities being treated on the same platform as the non-minority, however you define that? But that seems to be a huge criteria that I am hearing about and reading about with regard to the social responsibility. And also, what are their practices about? You pick up the newspaper and you read, well, now Chase has a $2 billion problem. Okay, well, they have a $2 billion problem. Now what are they going to do about it? How do they approach it? How do they take action on it? Is it socially responsible? Or is it like, I want to run away as fast as I can from the problem and not come up with a solution and not create a good sense of community around that?
Yeah. So in other words, they can just say, yeah, it happened. These things happen.
Yeah. Or not really get into the answer of what did happen.
Yeah.
Laying out the cards and saying, okay, this is what has happened and this is how we want to correct it.
Okay.
Moving forward.
By the way, folks, because you may be seeing this some months from now, so today's May 29th, and so some of the references that we make, like this Chase one, just happened a few weeks ago. Now it may seem like sort of old news to you. On the other hand, you may want to look and see what has happened as far as what positive steps have been taken. Obviously, we know that one so-called positive step is a head has rolled, but really, if that's going to address what has happened so that it won't be repeated.
Well,
we don't know.
one of the things that in promoting planned giving policies and procedures that we talk about a lot with the boards is you have to have buy-in. Everybody in the board has to buy into the mission of that particular nonprofit. The same thing holds true with corporate boards. And if you are taking a stance as a corporation to be socially responsible, it needs to have the board buy-in.
Yeah.
That once that happens, I think then the trickle down to top management, who frequently there are some top management people on the board, then the trickle down to the supervisors and the managers, and then to the employees, it gives a different sense.
Yeah. Okay. How do the fund managers screen these investments?
Well, they have screeners that are professionals at looking at the practices of the companies, and that can be from environmental, social, and governance. And again, it can be positive screens and negative screens. The negative screens are specifically looking for, as an example, no tobacco, no weapons, those types of things. That could be an example of two things. But they can also be looking at the positive screens, like, gee, this company is very active in their local community, not only helping local community, but they're helping underprivileged local community. They may be helping to fund businesses get started. They may be helping children have a youth program in the afternoon. Whatever they're doing, what kinds of things is each company doing? So that was interesting this time when I was reading on the screening. It promoted the positive aspect. Typically what I've read about is always the negative. What, we don't want this, we don't want this, but what do you want?
Yes.
Yeah. What are you looking for? And I think when you can put that tilt to it, it just makes it a more friendly time. And there's good out there. You can see the good that is happening, because we usually only hear in the public press about all the bad stuff that's happening.
And the tough part, though, is there are some companies that have both. So, just like individuals,
That's correct.
We each have our bad points or not so good points, and we each have our strengths. And so, how you weigh that, there is another aspect of this that I want to bring up, because we're going through questions fairly rapidly here. And that is, sometimes people decide that they want to own a share in these companies. So a good example, I guess, is Standard Oil. I mean, it has their fingers in a lot of pies.
Right.
And but there are people that maybe don't approve of some things that Standard Oil is doing, but they decide to buy shares of, maybe a few shares of Standard Oil, so that they can go to a shareholders meeting and that they have a voice. And so there is another aspect of this, that sometimes ownership, participating as a shareholder, actually can help maybe in at least bringing to a board of directors' attention or whatever, that there is concern about maybe what some of their actions are.
That could be correct, because that way it gives the person the opportunity to speak their piece if they're having an issue with a particular company. When you're working with mutual funds, though, again, you're hiring those individuals, the investment managers, but then also the screeners, to look at the total picture of the company. Like you said, there's going to be aspects of any company that could have a negative tilt to it. That's could be part of being in business. And as the socially responsible investor, my definition of what is socially responsible could be different than what is practical in the business world. At the end of the day, if we believe in capitalism, the company does need to make a profit to be able to pay back their investors. So at the extreme, could hear people saying, well, they're making all the profits and they're not giving them back to the community, or they're not giving them back to the shareholders. But I think that it would be a very difficult job to be a screener, because you're going to have, again, I like looking at the positive aspect and then adding the negative in there and seeing at the end of the day, is this company really a socially responsible company?
Yeah. Another aspect of this is that people do have, they're trying to support some of these new technologies and so forth. Okay,
Correct.
we're talking about like alternative energy is huge.
Right.
And
Right.
another big area is, of course, trying to come out with new technologies for the cars, maybe electric cars, hydrogen technology, what have you. But actually, these can be really highly risky investments, can't they?
They can, yeah, they can indeed. We work a lot with alternative investments, and as part of the structured investment philosophy, to provide more diversification. And it's a great way to be able to be introduced to a lot of startup companies that have great potential and can create a lot of good for society. We've worked with a number in the medical field, which is a way to help society. So any of these kind of investments can be risky and need to work with investors that are accredited investors. And the definition of that is $1 million of investable assets outside of the home. Mm-hmm. And those folks could have the wherewithal, if you put in $10,000, $15,000 into one of these startup companies, to be able to survive that if that did not work. Right. If they ended up with a zero investment. However, they have to have the stomach for it. Even if they may have the economics for it, they may not have the stomach for it. They may even have the social responsibility component, but they can't stand the thought of maybe not having any dollars left if the investment doesn't work out for them.
And I guess the other aspect of that is you don't want to bet the farm
Absolutely not.
On these. So,
no.
So some people, they may be taking really a disproportionate, and the bottom line is this a risk that you can afford to take? If you don't mind, in a sense, almost the charitable contribution, if you will.
Correct.
Okay, I'm trying to do something socially responsible. I'm trying to promote this technology that I think is going to be important for the future of the planet. And so that is a laudable thing as far as that is concerned. On the other hand, you don't want to put yourself in a position where you're putting your own future and the future of your family at stake.
Correct. Correct. That's why I think it's just critical to pay attention to those accredited investor rules.
Mm-hmm. Okay. All right. Well, you've been working a little bit with some of these clients that are, because I happen to know one of them.
Yes, indeed. That would be true.
I'm related. It happens to be my wife. So anyway, so we're concerned. She's particularly concerned in this area of socially responsible investing. So how has it been going as far as the results? How's taking this tilt been affecting results compared to the usual client that may not be so concerned about this?
Okay, well, we're fortunate with the institutional funds that we're using that we are able to have a U.S. component, an international component, and then an emerging market component. And that gives us the diversification that mirrors our core risk managed portfolio that is not in the socially responsible asset classes. Mm-hmm. But having those funds available to us, what I'm seeing is that the performance is pretty close to mirroring what's taking place with the global diversified portfolio. Again, the socially responsible one is globally diversified as well. Mm-hmm. And all the readings that I have done on the socially responsible says over your lifetime, you will not sacrifice your portfolio's return because you're creating a social, moral value system for how you're investing. And the other good news, women tend to be better investors than men because they tend to hold the course. They invest in something and they tend to hold it. Uh-huh. They don't jump ship easily. They have to have this is statistically, this is generally speaking, but they have to have a real solid reason for jumping ship that they're leaving. Uh-huh. And socially responsible investors, whether they're female or male, tend to have a stick-to-itiveness. And over their lifetimes, because of that, they are going to benefit over the person next door to them that, yeah, they're invested and they're not invested socially responsible. They're in mutual funds, but they tend to pull the trigger. Mm-hmm. When they get nervous, they pull the trigger. And statistically right now, we're seeing that socially responsible investors are not doing that as much. It still happens, but not as much.
Yeah. So again, there's something that's going on. There's a motivation beyond just the financial return. And so because they have that other reason
Right.
that they're investing, then it may make them more inclined to be more of a long-term investor. And
Correct.
if we can get people to hold on to these tough times, then for the most part, they're going to reap the rewards of doing so.
Right. I particularly have noticed that when people, I have several clients now that are doing this investing, and it is with inherited assets. And the common thread in all of that, and all the four of these people are women. And all four are doing the socially responsible investing. And the common thread is, this is not money I'm going to spend today. This is money that I want to create a legacy with, to my family, to my children, to my grandchildren, possibly to my great-grandchildren. And they're not too worried about short-term volatility. I don't hear that from them. I don't hear that panic, because they know that they're hoping they're going to live a nice long life, and at the end of the day, this is going to be something that they're handing forth to somebody else.
Yeah.
So
that's kind of a nice feeling, because I've talked to you about some, when we've had some of these downswings.
Right.
And, I mean, it is really tough for some of these seniors and so forth, and they're seeing, oh my gosh, here goes my retirement has suddenly been cut in half as far as the value is concerned.
Right.
And to get them to hold on.
But if you look back, if you turn back the clock to March 9th of 2009, I can't remember exactly where the Dow was, but it was like 6,500 or somewhere in that category. And you look today, here we are, May 29th of 2012, 3.25 years forward. If people sold out on March the 9th of 2009 and never got back into the market, look what they have missed. They missed a recovery.
Yes.
And so it's all in how you handhold. And you started the introduction out today of the meeting, of this session, with all the education credentials. We are truly an educational firm. We believe in educating our clients. And what we find, the more we educate and the more we hold the hand, when things get tough, the more likely they are to stay put.
Yes.
And for their long-term financial well-being, that's superior for them.
Yeah. Okay. Well, as I said, that is a really important role for the financial advisor. Well, we have some time here left, Peggy. So maybe you could talk a little bit about, an experience, maybe with a particular client that wanted to do this socially responsible and sustainable investing, and how you help them in that process.
Well, I can speak from a generality on that because, again, all four of these people had very similar messages to me, and one happens to be your wife.
Okay.
And the message was a heartfelt need to do well for community, to do well for society, but also realizing that this money was something they were given and wanted to take it and make that special. That this is I don't like necessarily to use the word windfall, but it's a special gift that was transferred to them, and they want to be able to transfer that to the next generation and do it in such a way that, yes, there's some growth, but their legacy is to leave a message of, I cared about my community. And I worked my best in my investment philosophy statement to come up with investment vehicles that look for the socially responsible aspects. That, to me, was very poignant. To have that many people have that same message, and all these ladies are all about the same age, and all have terrific families and have grandchildren, and the grandchildren are very important to them. And maybe there's something about having grandchildren that creates a different way of seeing things that you hadn't seen previously, or maybe it's because we're inundated so much in the news with bad conversation, bad issues, that when we leave this planet, we want to know that we did something significant, and that we did it, and we maintained the funds that we received but we did it in a way that helped community. You know, I've done a lot of legacy work, and you know, it's the common phraseology is shirt sleeves to shirt sleeves in 3 generations.
Right.
Well, wouldn't it be nice if we can start to create that differently, that we create the legacy that gets passed on from one generation to the next generation? Right now, this money that we're looking at with these 4 investors is second generation money.
Yes.
I mean, it's gone to the second generation. Wouldn't it be great if we could get to the 3rd generation with it still intact and having helped community along the way?
Yes, it would be great. And so it's good to hear, you know, that people have these positive concerns, and particularly the ladies. So thank you, ladies, you know, for caring, and that's the way that ladies are. They're nurturing people, and so they're trying to nurture our community as well as their families. And frankly, folks, we're all related.
Right. In some
we're all one big family.
Yeah.
In a sense.
What we do can influence lots of people around us.
Yeah. So maybe you have a final thought that you'd like to throw out in the next minute or so.
Final thought would be, number one, I'm glad that you asked me to come here today and talk about this. I think the more that we spread word out about investment methodologies that are available, the more that can help the public. And also that the public can start to realize that just because you are looking for social, moral, value type investments does not mean it will compromise your lifestyle. The biggest thing is hanging on to the investment methodology. Once it's diversified, hang on to it, and you can take a stream of income from that and live a very nice lifestyle. So just buy and hold is the phraseology.
There you go.
This is just with socially responsible investing.
Okay. Peggy, thanks so much for joining me today.
You're welcome.
Folks, we hope that you found this to be of value, maybe made you aware of some things that you hadn't been aware of before, and another approach to investing. And we'll see you next time on Financial Insider Weekly.